Welcome to today's market report.
Wall Street equities rallied and the dollar tumbled after signs of sharply decelerating U.S. inflation prompted bets that the Federal Reserve would raise interest rates at a slower pace than previously expected. While Treasury yields since regained some ground, they had tumbled after data showed consumer prices did not rise in July as the cost of gasoline fell, delivering the first notable sign of relief for Americans who have watched inflation soar over the past 2 years. Traders priced in a 50 basis points rate hike next month, compared with the 75 basis points increase that had been expected before inflation report. This morning's inflation report was a stress reliever, and now we're getting buying stocks, bonds, and commodities. We haven't had an inflation release that was lower than expected in quite some time, but there was still a lot of uncertainty around what the Fed would do and the economic growth and earnings outlook for 2023. We're staying neutral here until we get a better view of next year. The Dow Jones rose 1.26%. S&P 500 gained 1.75%, Nasdaq added 2.46%. The Pan-European Stock 600 index rose 0.89%, and MSCI schedule stocks across the globe gained 1.54%. Oil prices rebounded from losses early in the session after encouraging figures on U.S. gasoline demand and as the inflation figure drove investors into riskier assets. U.S. crude settled up 1.58%. The GBP-USD pair catches aggressive bids and surges past the 122 mark, hitting a 1.5-week high. The strong intraday risk-on mode allowed the cable to break through the 121.30 to 121.40 resistance zone, triggering an aggressive short covering move. The dollar index fell 1.063%, with the euro up 0.87% to 1.03. Euro-yen dives sharply below 137 as risk appetite improves. And the same for dollar-yen.
This is today's market news. Thanks for listening. We'll see you next time.